Hello, everybody. My name is Drew Dosick, and welcome to Trading the Close. Guys, today was the day, the FOMC meeting. Jerome Powell came out, and he didn't come out dovish. He didn't necessarily come out hawkish, but he wasn't very enthusiastic about the economy, mainly the jobs data. The jobs data is weakening. That was his excuse to go ahead and cut interest rates, 0.25 percentage points cut. He did also say there likely will be 2 more cuts coming this year and then 1 cut potentially in 2026. Of course, they're going to have to evaluate the data once we get through that area. But guys, let me tell you, this is really some curious stuff because the markets initially reacted with a move higher and then a big sharp sell-off because, again, the jobs data is coming in weaker. That's implying there that there's going to be less people with jobs, less people participating in the economy potentially moving forward, which isn't that great overall. However, on the short term, small cap stocks, which do borrow a lot of money, are going to benefit from this with lower interest rates, cutting interest rates. Initially, the IWM is doing okay. So let's check out where everything panned out at the end of the day today in the market summary board. So as you see here, we've got the Dow Jones up 0.45%, Nasdaq up 0.26%, S&P 500 now down 2.1%, U.S. oil down 0.95%. Gold actually started selling off too. We'll get into the reasons why here in a little bit. Gold down 0.78%, and Bitcoin now down 0.99% on the chart. So, okay, guys, let's jump into the S&P 500 heat map. Basically, we kind of have a flat day, right? We're slightly down on the markets. And then really after the FOMC announcements, in essence, we're kind of sideways. And what do we get? We get basically a chopped day on the markets. NVIDIA, though, big pressure there, down 2.59%. As we mentioned the other day, coming out of China, China is restricting sales of NVIDIA chips and or recommending companies in China not to purchase them. AVGO down 4.03%. Oracle down 1.69%. Palantir down 1.11%. Google down 0.75%. AMD down 0.78%. But we do have some other green areas in the screen here. If you notice on the finance, we were red a lot of days leading into this. As I said, with lower interest rates, some of these smaller banks are benefiting from that. Smaller cap stocks, again, they're benefiting from that potential for new mortgages getting reduced rates, and also that refinancing does generate an awful lot of income. You see Philip Morris up 2%, Tesla up 1.1%, and Amazon down 1.19%. So guys, the story of the day obviously is the S&P 500. Look at this candle, a lot of indecision going on here. We got big whips on the bottom and on the top. But the real story comes in the 10-minute chart. So let's look at this here. This was really curious, guys. The start of the day was right here on this 10-minute candle. We've been talking about these parallels. We were comfortably inside the parallel yesterday and the day before, but we never confirmed inside this parallel. First candle out the gate, came down, tested the bottom into this parallel, then got a nice bounce up. Then the next candle following plunged right through. Then look at this retest. Guys, this parallel is very old. It goes back at least a year on the charts. And then right here, we have the precision of this test right back up to the parallel, then rejected. And then as you see here at 2 o'clock, right here, the fireworks went off. We got a big pop, a big drop down here on the market. See this on the SPX all the way down to 65.51, and then quickly recovered back up. And look what it's doing, guys. It's retesting that parallel just as it did back here at 11:10 this morning. So really still, guys, and this may sound repetitive, and because it is, we're testing the parallel. We tried to get in today. We were trying to confirm. We did not get that. Matter of fact, we're closing outside of that parallel. So then that now kicks the can into tomorrow. Are we going to break this inclining trend line right here? That, as we've discussed, has been broken a few times, but has never had follow-up selling pressure. So tomorrow, the clear lines in the sand for us to pay attention to where markets are going to go in the near term is right here on this trend line, right around 65.85, and then the parallel down up here at 66.07. But in all honesty, folks, you really got to think about the markets right here. A lot of people are going to be rejoicing with more interest rate cuts on the horizon, and a lot of people are going to be piling into stocks. But at the same point, other folks that recognize the market is and the economy is weakening are going to be interested in getting out. This is going to be a tug of war over the next couple of weeks. Who's going to win? We'll find out. I know we're really high on the charts, and we've been looking for a 5 to 10% correction ever since this bounce occurred in April, and we just haven't gotten it yet. Are we going to finally get it coming soon? We'll see. But right now, today is not the day. We're kicking the can again into tomorrow and then eventually next week. All right, guys. So next up, the Qs. Now, the Qs did a great job recovering as well. As you can see here, we didn't have as big of a wick on the top side. This is a stronger candle close. It does make a little bit of sense, though, since we do have the Qs here with a nice breakout with a targeted measured move up here at 597 and 65 cents. Great recovery on the chart. Ultimately, you can kind of X this out. Yes, it's a wick and it happened, but this really is a test candle. And I stress this in my education courses, folks. You want to pay attention to where price closes. That's the most important, especially when you're trying to figure out patterns on a chart. Notice we closed right here near and inside the top half of this green candle. That's a good close. As long as we continue to close in this green candle, especially in the top half, that's bullish. That can generate bullish consolidation for the completed measured move up here at 597.65. Next up, SMH. SMH, as you see here, was testing to break down out of this parallel. Parallel saved it. And as we established before, folks, once you get inside that parallel, it will have longer staying power. It can still break, as we see right here on the left-hand side of the screen. But notice when price came down after confirming into that parallel, it bounced up. It actually even got saved the following day and then went through. So it took 3 days of trading to get through that trend line. And then look how many days it took to get back up inside that parallel. We tried and got rejected here, got rejected here, got rejected here, then finally gapped up into it. So you can tell that this area is very significant on the charts, whether it gets support for the price or once price breaks down through it, it will also then be resistance moving back up. Critical area on the charts. Ultimately, SMH for now has been saved. That does say that, though, that since it is saved, we could still keep pushing up on the SMH. Next resistance is going to be up here at 311 and 91 cents. IWM, look at this candle, guys. Oh my goodness, there was all sorts of price activity on the IWM today. You look at the 10-minute candle, you can see here, most of which all took place right after the FOMC. So right here's that 2 o'clock candle, immediately started ripping on the fact that we are cutting rates, and that was going to bode well for small caps. But then when they started talking about the job data, the labor market decreasing and not looking as strong as what was anticipated earlier this year, especially with those revisions, the chart quickly flipped, creating a bear flag. Look at this. We were bull flagging up here for 3 candles. And then this one candle said, nope, not so fast. Right when Jerome Powell started speaking at 2:30, started pulling back down on the charts. Look where it caught support, folks, right here on this inclining trend line, ultimately failing after hitting it and hitting it and hitting it and hitting it, finally breaking through, even tried to attempt to come back up, ultimately failing by the end of the day. So back over on the daily chart, what this does, not too much for the IWM. It's not necessarily positive, but again, right back to where the close is. It's still closing within the range of this green candle. It is closing underneath this short-term inclining trend line that can easily be retaken tomorrow. So not too much has changed. Ultimately, still think this all-time high of 244.98 will be tagged in the near future. Got so extremely close today, about 70 cents away after the FOMC. Truly remarkable stuff. Here we go, guys, on the next chart with Bitcoin. Check out this. So we see bull flag consolidation. Bitcoin said NBD to the FOMC. No big deal, guys. Bitcoin's just hanging out, relaxing. Bull flag consolidation, not really moving much. And then ultimately, a bull flag leads to more upside. Plus, I've got this inverse head and shoulders on the chart. As I've explained before, it does have a targeted move up here to 119,000 and change. So I'm anticipating that to be completed before Bitcoin does have any selling pressure reemerge on this chart. But one thing to note too, if and when Bitcoin hits this target, it's going to be in the top 50% portion of this parallel channel. That's positive for Bitcoin. So that then could lead as a flip, basically a coin flip. Right here, it's about right in between this inclining dotted trend line and the top end of the parallel channel. So it really is a coin flip. Are we going to go higher once tagging that level, or are we going to go lower? The S&P 500 will help guide us. If we start selling off once we reach this level, the likelihood Bitcoin's going to start rolling back over, going lower on the charts. All right, next up, gold. As you see here, gold pushed to all new time highs again today. Get as high as 37.07 and 47 cents. If I zoom in on the 10-minute chart, though, you can see it paints a slightly different picture after the FOMC. Notice here, we had a big move up initially, making those new all-time highs on gold, and then also quickly reverse back down, creating a 10-minute bear flag pattern, implying downside in the very near term. If I flip over to the dollar, this does paint the picture and illustrates why gold did what it did. If we flip over to the 10-minute chart, look at this reaction. So we've got a sharp move down on the dollar, the DXY. If we go over to gold, what happened? We had a sharp move up right at the FOMC. You can see how these work inversely with each other. The dollar dropped, gold popped, and then next thing you know, the dollar starts regaining strength and pushing higher than where it was during the FOMC, and gold then collapsed and started bear flagging. A stronger dollar will be weaker for gold ultimately, at least in the near term. And this is very curious. This doesn't happen all the time. The gold does not follow the dollar tick for tick. It just doesn't work like that. But during the FOMC announcements, you can clearly see there's opposite reactions going on the gold and the dollar chart. It works like that very near term, right around the FOMC. So keep that in mind in the future when you are watching the reactions on the chart. Next up, we've got silver. Silver here did get hit a little bit harder than gold. You see, we didn't reach new highs on silver, at least on this recent move up on this chart. So we've come right back down, initially got support right here at $41.66. You see current trading price action is in that area. Should we see selling pressure emerge further tomorrow on silver, this inclining trend line will be that area of support at $40.30. Be watching for a great level of support right there. For anybody that hasn't been in or gotten any silver yet, that would be a good first area to start entering. And then, of course, we've got further support areas down lower in which you can start accumulating more and more silver. Next up, U.S. oil. U.S. oil chart really didn't change too much, folks. We're basically still in this bearish consolidation. Yes, we have bounced up off of this declining trend line. And just to remind you folks, if you haven't seen this show before, this declining trend line is from back in December of 2023, connected over to the next major pivot. And then after that point, I've just strung out that trend line to ensure that both of those pivots are in contact with that trend line. And look at the data and information it provides for us. When price is broken under, it's had a difficult time to get back up. Then when price has gotten above it, it's now provided support coming back down. And so that's where we're at. We've now hit it more than 3 times on this most recent attempts on the downside. So this leaves this level very vulnerable for a break should price come right back down into it. I have a downside target here of $59.50. Extreme downside target, which I do not believe is going to be hit, is at $57 on the chart. Very curious what happens here with this bearish consolidation with U.S. oil. Next up, nat gas. Nat gas did have a decent day today earlier, did pop up, made new recent highs, and then has since reversed back down in closing. But ultimately, the main thing about this chart is still maintain price above this declining trend line that you see drawn out from this pivot on July 25th, connected over to a pivot on Monday, September the 8th. You see here with that trend line, we had price action get above it yesterday, tagged resistance from this inclining trend line right here from pivot on April 24th. And has since now price is stuck on in between both of these trend lines. So far, that's good for nat gas because if price continues stuck in this range, a bull flag will begin to form, implying more upside in nat gas. It's always great when you get consolidation. And folks, I like to think of it this way. Whenever price is chopping sideways, think of it kind of like you're running a race, right? And imagine these candles are the participants in that race, and you're running up a hill, or you're running or sprinting during a long leg of that race. Well, once you get to a flat place, if you're running uphill, or if you're at the end of the race, what do? You take a break. You relax, you get some drinks, you eat some food, you re-energize. That's what consolidation does in my mind. So you think of it as a way for investors to sort themselves out with pricing. And in essence, that commodity or that stock is basically regaining momentum when it's chopping sideways. And that is like a spring getting tighter and tighter and tighter. And then once that does break out, then it's like, boom, breakout. Now we have one or two candles pushing up much higher on the chart. So you want to see consolidation if you're a bull on nat gas. When you just get accelerated moves up, they're usually left with accelerated moves down. So if you want to have staying power, you want to see that momentum build. You want to see that consolidation so you can break through levels appropriately and march towards the next resistance trend line. All right, guys, next up, the 10-year yield. 10-year yield was very curious today, especially on the 10 minutes. So let's just pop into it. You can see here right into 2 o'clock right here, big drop here on the 10-year yield. We got down under 4%. You can see it got as low as 3.992% before popping right back up and marching up on the charts to finish here at 4.072%. Ultimately, though, even with that much volatility on the daily chart, you see there really wasn't anything that changed. We're all still closing right here in this range. While it was fun to watch, don't get me wrong, I love volatility on charts. Even if I'm not in a trade, I love watching the price movement, where price gets support, where it stops, etc. But you see here, we're still in bearish consolidation. That does imply further downside to come. And of course, there was 2 rate cuts announced. So that does make sense that it should be displayed that way on the charts. This is a great example, folks, of how technical analysis reveals itself and provides insight as to where price is going to go in the future. That's the main reason we do this show. I track daily what these charts are doing to give you insight as the probabilities do shift with every single candle that's printed, especially when that does develop into, say, an inverse head and shoulders pattern, like here on Norwegian Cruise Lines. Now, Norwegian Cruise Lines really didn't do anything today, and it really didn't do much in the last few days. But in my analysis at night, I've noticed what started to boil up here on this NCLH chart. If you can see here, it's not the cleanest of inverse head and shoulders, but we clearly have a left shoulder, a massive head, and then this one candle right here that pokes up through this trend line creates the right armpit, followed by the right shoulder curling right up there. Now, we didn't break through on this attempt. We've gotten rejected, but I bring this to your attention because if you look back further on this chart, you can see that this trend line is actually generated from back here from a pivot from March 5th in 2021. So this is a really long time ago as far as a trend line that has been holding down price on Norwegian Cruise Lines. Now, let me flip out to the weekly chart to give you a better picture. You can see we were trading all up in this range prior to COVID. And then once COVID happened, the world, especially the travel industry, collapsed, as we can see displayed right here on the charts, and since has been forming a very long-term bear flag that has not broken out yet, but we are attempting to break out. We are very close to break out on this chart, and should we get above this declining trend line, confirm, potentially have a continuing move up, then that would then trigger this inverse head and shoulders pattern with a targeted measured move all the way up here at $40.41. That's a 50% increase from current price. Guys, that's a fantastic potential move. Look at this. Over 60, excuse me. It's a 60% increase from current price. Now, would I be buying here? I'm not a buyer at this exact moment. I wouldn't blame you for buying here. What I would rather see is a break above, a confirming move above, and then I would be a buyer on any sort of pullbacks. But as you see here, the trend line break is at $26.40. Truly remarkable what's going on this chart, especially when it's telling us there's potential for 60% upside from current price. That raises my attention. That lets me pay attention to where price is going to do on this chart, as a great opportunity is essentially right in front of us. Next up, now here's an opportunity that has since already passed. And this is what's great, guys, also about technical analysis. Just because now we've noticed that BE, and actually I've been watching this for a while, but now that we have BE on the show, BE's ripping higher, and it looks like, oh my gosh, the move's already done. And if that's the case, fine. That's all right. It doesn't matter, because the technical analysis on this chart will give us insight to get back into BE. So let's get back into the chart. And the reason why BE really has been ripping higher is because in July, they did announce that Oracle chose BE to help supply their power to a lot of their data centers. So BE, as you can see here, a lot of investors just started piling in, and has since ripped from 25 bucks all the way up here near 80 bucks, over 200% gain since July. Incredible move. But as you see here down at the lower part of the screen, the RSI is at 92.53. That's the highest it has ever been on the history of this chart. So that doesn't mean it's going to fall tomorrow, but when it does mean it's likely going to either pause, consolidate, or pull back. And the best area of pullbacks for anybody interested in getting into BE, because guys, AI data centers are being built now and contracts are being signed now, but they're going to continue to be built for the next 5 years. 5 years. And so the increased demand for power will be there because there still will be Americans consuming all the power that we do, plus add in all these data centers that are in essence going to soak up as much power as cities. We're going to be needing a lot more power. So any pullbacks, especially on charts that have a breakout pattern like this, because if you notice, we broke out here on the weekly chart, never retraced to this trend line. So we continued marching up, and then we even broke through this longer term trend line, longer than the previous one, and still haven't had any sort of pullbacks. There will be a moment people start taking profits. If they do, profits or the best area of entry into BE would be on this inclining trend line right here at $59.67. You've also got to keep in mind, whenever there's rapid accelerated moves on a chart, when the price does start selling, it also could sell, and it could sell rapidly right through some major levels of support, which is why I've listed up the next level beyond should this trend line get pierced at $51.16. Right there would be a great area of support for a price to come back in and then bounce up and continue moving up on the charts. Next up, Uber. Uber here, as you can see, did retreat down above an inclining parallel channel. They did have some news today, though, with Lucid. They did buy, and it's actually changed at this moment, but they bought and invested in thousands of Lucid vehicles to expand their autonomous driving service in the future. So initially, the price did react by dropping down because that's a significant investment on Uber's behalf, but that could be a great investment for the future when they start having more autonomous driving passengers hopping into their vehicles. We'll see how that plays out, but I wanted to bring this to your attention. We have an inclining trend line right here with price rapidly decreasing right into that trend line, right about $91.20. Just beneath there, there's another solid level of support at $90.48. There's also a gap fill right here at $90.99. This will be very difficult for Uber to get through in one go. So this could be a great buying opportunity, although it's up here at the top of the charts. And I caution you about doing that. This could be for the aggressive trader a buying opportunity for a quick pop up here to this inclining trend line right around $100. Now, after that point, be careful because, again, look at the weekly time frame on Uber with the RSI. We're not quite overbought, but we're closer towards the top half than the bottom half, right? So we're sitting at 56.8 on the daily. You can see we've actually retraced down here to the 50. So with it all being said, being up here at the top of the charts, RSI is implying we still could be going higher. That would make that trade, that swing trade, near-term swing trade up to the $100 mark, a nice high probability setup should price continue down into that support range tomorrow. Next up, AVGO. AVGO, I bring up this trend line for you to give you some analysis on what's going on with this chart of AVGO. If you notice here, this trend line, pretty similar to like what we had going on with the S&P 500, except for when we did break right here, we actually had several days of staying power down here, and then we caught support on an inclining trend line, and then earnings came, guys, and earnings ripped the stock up above this trend line, and then price then started continuing pushing up on the chart, almost as if this never happened with this price breaking down. Well, then today you can see we retested that trend line. Matter of fact, we got down beneath it after the FOMC announcement. So what that's telling me, though, is that AVGO is potentially putting in a bull trap right here. You notice with this inclining trend line, price never confirmed up here in this range. Price just got up, consolidated, and has since failed. Whenever we have failed moves, they usually result in some of the biggest moves in the opposite direction. But right now, AVGO is being held by a thread, basically by this small narrow inclining trend line. So it's something to pay attention to in the very near future. If we do have some selling come up on AVGO, for support isn't that far away, about 30 bucks lower at 317.54. If we have larger selling take place, 290.59 and 225.54. Any of those pullbacks, especially under $300, would be very interesting, as AVGO is definitely a powerhouse tech company here in the United States. It would be great to pick it up under $300. All right, guys, that wraps up trading the close. A lot of info as far as the FOMC. I can't wait to get into some more trading action tomorrow and also bring you some more great trading setups. Until then, God bless, and thank you again for tuning in, and I'll see you guys on the charts. Catch you next time.